So you're thinking about moving to Texas, but there's one thing that just keeps wearing on the back of your mind, and that is the property taxes. That's right, we hear it over and over and over again, especially people coming from California, New York, or even Chicago, that they definitely want to move here, but they hear the property taxes are outrageous. And well, they can be, but there are some certain things you want to know, and when you actually compare it to where you live, is it still a good deal? And that's what we're going to talk about in this video. So if you stick around all the way through, I'll explain to you in some different price points based on what may fit inside your budget. We'll look at the tax differences between Texas, and we're going to focus on California in this video. And that way you can get a good idea and see if it's going to be a good fit for you. And we're going to get after it right now. Hey, if this is your first time to the channel and you want to know everything there is about living in Dallas, Texas and the surrounding areas, then subscribe below, tap the bell for notifications so you can be the first to learn about the current market in Dallas. My name is Levi. You know, my team and I, we get calls and emails every single day from people just like you and you and you and you. We're looking to make their move to Dallas. We absolutely love it. So whether you're moving in 9 days or 90 days, just give us a call, shoot us a text, or send us an email. Happy to help you make a smooth move to Dallas. So as I mentioned, we're going to kind of compare California taxes to Texas taxes. Now I got to throw some disclaimers out there first and foremost, right? So I am not a licensed tax professional, number one. Number two, I'm not a licensed CPA either. So you definitely want to check with your tax professional, a CPA, other people to confirm this sort of thing. I do not have any association, nor do I work with the IRS, the state of Texas, the state of California, the Dallas County Appraisal District, the California Appraisal District, or anybody for that fact. So this is all based on just my own personal understanding and research and personal experience as well, being a resident in Texas. So I'm going to share with you some kind of facts and figures about California tax rates from what I've learned. And again, if you're a mathematician, and I might mess something up, but I'm just saying that these are all going to be, you know, estimates, but I think I'm pretty sure that I've done a good job on my estimates. So I've double checked some things, I've cross-referenced on different websites and things like that. So I think it should give you a good idea, but mainly I just want to give you a great comparison between California and Texas if you're thinking about making the move and you're concerned about property taxes. So I'm going to jump in my computer so you can follow along on the screen, because I think that's going to help out the best. And so let's jump in my computer and take a look. All right, so now we're in my computer. Welcome to my computer. But I just put together this, this slide presentation to hopefully kind of make this a little bit easier to comprehend, all right? So what we're gonna look at is we're gonna look at a $400,000 house, a $600,000 house, and a $1 million house. We're dealing a lot with in the $600,000 range, but also in the $1 million range, but just want you to kind of see what may fit inside your budget. So from what I found, California tax rate on properties, let's just say it's around 1.115%. It's my understanding that there's a cap at 2%, so it shouldn't be higher than that, but I just wanted to use 1.115 because that seemed to be the consistent average. And I wanted to use Texas for 2.5. Now here in the Dallas-Fort Worth Metroplex, there is several different tax rates depending on the area that you will be in. They range, they're as low as 1.75% up to 2.75 or even 3%. So there isn't a cap at 2%, unfortunately. I know there's something the legislation has been working on recently, but I wouldn't hold my breath. But there are some tips and tricks that will work for you, and I'll share those with you at the end of this video. So let's just look at a $400,000 house right now, and how does that compare? Well, let's take a look. We'll see the property tax based on a 1.115 percentage rate off of 400,000 is going to be around $4,400. Now, here's the deal. Most people that buy in that range have an average income of around $90,000. So now let's look at the state income tax. If you have a $90,000 income, well, according to what I found online, the California state income tax rate is 9.3% for anybody earning between $58,000 to $299,000, all right? So that's going to put your state income tax bill around $8,370. So that's going to give you a total taxable amount of $12,830. Now you compare that to Texas, even though you're looking at a 2.5% tax rate on that $400,000 property, well, that would be about $10,000. Now you compare that with no state income tax, well, then your total bill is going to be around $10,000. So you compare that to what you're paying in California right now, that could be a savings of $2,830 per year. But here's the kicker. So this is what I've learned, is that most Californians have not heard of the homestead exemption because that doesn't exist in California, from my understanding. Well, in Texas, we have a homestead exemption that can be up to 20% of the assessed value of your home. So let's take, for example, if your home is $400,000, if you establish as a primary residence that home here in Texas, then you can apply, and that can give you up to 20% off of your assessed value, meaning your assessed value would only be $320,000 compared to $400,000. So now, based on 2.5%, that would make your tax rate only around $8,000. So now you're saving close to $4,830 per year with the exemption if you were to put that in place. That's pretty significant, I would say. So that's something to keep in mind. And so you want to look at the appraisal district in the area, whichever area you move to. At least in Dallas, you go to dallascad.org, and that's the Dallas County Appraisal District, and you'll see where you can apply for a homestead exemption. That's usually at 20%. On top of that, they have disabled veteran exemptions and 65 and older exemptions as well. So if you fall into one of those two categories, then you could receive some additional percentage off of your property value, or the assessed amount, the taxable amount, I should say, not the property value. So your assessed value can be different from your property value, okay? But they normally do these assessments each year, and they will come up with their own assessments, not necessarily based on the true value of the home. So I'll tell you how to fight that with a simple trick, and I'll give that to you towards the end. All right, so now let's go to, let's look at the $600,000 range, all right? At the $600,000 range, let's compare the same. Your property tax, we're gonna keep that around 1.115%, so you'd have property taxes of around $6,690. But normally people in that price range usually have an income around $150,000, whether you're single or married together, then your income's usually around that mark. Think about this. Again, your state income tax is going to be at 9.3% because you still fall within that $58,000 to $299,000 range. So that would put your taxable income around $13,950 for a total of around $20,640. Now you compare that to Texas. Let's say you've got that same $600,000 house at 2.5%, $15,000 property tax bill, which people would say that is crazy. But again, no state income tax. So you're saving that $13,950. So your total bill is going to be $15,000 compared to the $20,640. So you're saving over $5,000 just from that standpoint. Now, let's factor in the homestead exemption, and let's say it is your primary residence and you get that 20% off the assessed value. Well, that would put your, well, that's incorrect. That's not 580, that would be 480. So that would be 480. Just notice that typo. So your assessed value would be $480,000. And so your taxable amount would be $12,000. And again, no state income tax. So therefore, again, $12,000 compared to $20,640. So are the property taxes a little higher and a little bit more? Yes, absolutely. But if you're depending on where your income is, you're probably going to make that up quite easily on, with no state income tax. So let's look at the $1 million range now. So if we look at the $1 million range in California, your property taxes would be around $11,150. That's pretty good, I will admit. But your income tax, that is much higher. And so that's going to be around $23,250. Oh, I'm sorry. scratch that. You're not $1 million income. I'm basing this off of 225, another typo that I just realized I have right there. So didn't put in there, I was basing this off of a $225,000 income, okay? So I hope you're still following with me there. And so therefore your taxable amount would be $34,400 because at 225,000, let me just make sure that's right. Actually, I based that off of a $250,000 salary, okay? So let's scratch that. You can see, wow. $250,000, okay. That would be the income tax off of $250,000, and you would still fall within that $299,000 range. Well, look at your property tax for your home in Texas. $25,000. Yes, seems like a lot, but again, no state income tax, so your total bill would be $25,000. And again, if you applied for the homestead exemption and was granted up to 20%, then your assessed value would actually be $800,000, leading to $20,000 tax bill, no state income tax, and $20,000 would be the total amount compared to $34,400, a savings of over $14,000. So, you know, really what that brings me to is, are property taxes in Texas higher? Yes, but when you compare that or look at everything that's involved, are you still saving money or are you going to be better off? According to this, it appears that way. Now, here's the other aspect. So that little trick I was going to tell you about is there's a company here called Texas Tax Protest. I'm not endorsed by them. I don't get anything back from them, but it's a company that I used, and for a small flat fee, which I think is they're way underpaid. I don't know how they do it, but it's like $300. You pay Texas Tax Protest $300. They will fight your taxes and usually get them locked in for 3 years. So if you move into the property and you buy, let's say you bought a house that was being taxed at $400,000, but you bought it at $500,000 because there was maybe some improvements or so. Well, if they come and they jump that up to $500,000, then what you can do is you hire Texas Tax Protest. They'll kind of try to they will dispute the taxes for you. They have a very high success rate. As far as I know, it's like in the 90 percentile. They'll not only get likely get your property taxes reduced, but then that gets locked in for the next 3 years. So that's something that I think is well worth the fee, and I highly recommend it. I think you should give it a try. But I hope you found this helpful. If you did, please comment below. Also, what really helps us out the most is if you watch another video. So please watch whatever one comes up next, or choose out of all the ones we have. We have full vlog tours of all of the Dallas suburbs, some of the neighborhoods in Dallas. We're adding more every single week. So if you really want to know everything there is about Dallas, this is definitely the channel for you. And again, whether you're moving in 9 days or 90 days, give us a call, shoot us a text, or send us an email. Happy to help you out. And again, we just hope to see you around town.